Bitcoin seems to be stuck just under 39K, but now is dropping as we're talking.
Oh no, we suck again.
Or is it, oh no, we're stuck again? I guess we're going to see what happens here. We've got a lot of news today. You might be disconcerted by your tax preparation. Might not make you happy when you hear what the CEO of Intuit had to say. We have the Bitcoin chart. We have some other altcoin charts and a whole lot going on in the news. You don't want to miss it. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the what's my name? Hi, Scott, also known as the Wolf of All Streets, also known as Scrappy Gilmore, Lord of Coins, Shooter McCracken, you guys name it. Yeah, I'm in my golf stuff. I'm going to go do golfing after this. Before we get started, please subscribe to the channel and take your lucky golf tee, put it in your mouth. And jackhammer that like button with it, but don't swallow it. If I told my kid to do that, it would be down his throat and we'd be in the hospital. Wearing my Tiger Woods hat. Hope I don't get in a car wreck or hit with a baseball bat and start sucking terribly at golf. That'll be bad. Hey guys. Yeah. Hey guys, what's going on? So Bitcoin seems to be dropping right after we did the title about it being boring and stuck. Seems to have unstuck itself a bit. We will take a look at that chart. Brother, you look so much better with facial hair. Not something you say to a dude, Adam. Scott, I really found you much more attractive with facial hair, Scott. No, I look great. I look fucking great. I look great. Feels good. Smooth. Anyway, is that a Greg Norman sweater? No, I'm not 400 years old. And I don't lose in the last round of every tournament I play for my entire career. No, man, I don't know. It's something Emmy bought me. It's got a dog on it. It's got a dog. Hangs out with this dog. Dog theme. I don't know, man. It was kind of chilly out this morning. So, yeah. Hey, Scott, do you super glue pubes to your face? Only on leap year Wednesdays. I think it's blue. Anyways, guys, so yeah, we got some things to talk about and we're going to get it underway rather quick because you know what? As I just said in the tweet, if you guys saw it, taxes, they're a thing and you might be screwed. You might be pretty screwed. Here we go. Intuit CEO, who has no vested interest in your taxes. Yeah, Intuit, they own QuickBooks, I think Quicken, right? Americans are increasingly investing in speculative assets. Yeah, we know that. The regulations around Bitcoin and NFTs remain murky. We know that. But here's what he's had to say. We're going to see a lot of that throughout tax season where folks just didn't understand what they did. And there's a lot of millennials that really did a lot of trading without knowing what the implications are. They are shocked as to how much money they've lost or how much they owe because they were, in essence, gambling with their money. Saying here, NFTs give buyers the right to build images could face a tax rate as high as 37%. My trades face a tax rate of 37% if they are short-term capital gains because I'm the highest tax bracket, and it is the pain train. I think they own TurboTax, maybe. But definitely QuickBooks. But yeah, guys, this is a big deal if you're in the United States. I don't know what the tax code is in your country, but I can say that it's aggressive here and that the United States basically takes the most aggressive stance possible. But let's take the example of an NFT. I think I talked about this maybe yesterday, so I don't want to waste too much time on it. Let's say that Ethereum's $2,500 and you buy an NFT for one Ethereum. If you bought that Ethereum at $100, you now owe taxes on that $2,400 gain, right? So you have to calculate that in the price of the NFT. Anytime you spend crypto in the United States, buy a cup of coffee with your Bitcoin, you are selling Bitcoin because it is viewed as property and not currency. Most people don't understand the tax implications of the small decisions that they make with their crypto. That, for me, is because I had a first in, first out approach when I started in 2016. Once you set it, you cannot change it. Unfortunately, I had bad accounting advice. Now, if you're in last in, first out, then you could buy some new Ethereum, go buy the NFT. You're selling the new Ethereum you just bought. The taxable implications are different. But the bottom line, guys, no matter what you're doing in crypto, every time you buy something with crypto, it is a taxable sale of your crypto, and you need to consider that. I had friends in 2017 who quite literally made millions of dollars. By tax time, they had lost all of it, but they still owed the taxes on the unrealized gain because they had never realized it to dollars. Imagine getting $1 million tax bill when your crypto portfolio is worth less than $200,000 at the time you owe it. That happened to many people, which means how and where do you decide FIFO, LIFO? It's when you file. Whenever you first filed crypto taxes, you effectively chose whether you know it or not, and that's the one you have to legally stick to, right? So that's how it is, guys. That's how it is. You know, you can end up with a massive tax bill. That is why, let's just leave it right here. Anytime you do anything with crypto, after the transaction, sadly, best, whatever your tax bracket is, I just do 40%. Take 40% out into dollars or USDC, which, you know, can earn interest, but effectively dollars, and leave it there and don't put it back in. Otherwise, you could end up with a massive tax bill and no dollars to pay it. So what's better? Well, there's advantages to each. First in, first out means that when you sell things, generally you'll be paying long-term capital gains, which can be around 20% instead of your short-term capital gains. If you're selling something you've had for under a year, is at your income tax bracket, highest tax bracket around 37, 38%, something like that. So if you're a really long-term holder, FIFO might be better for you because you want to pay more long-term cap gains. But if you're going to actually do stuff with your crypto, you don't want to be selling Bitcoin that you bought at $1,000 just to buy a cup of coffee, right? So maybe HIFO, highest in, first out, LIFO, last in, first out, could be good for you. That said, almost every accountant I talk to still recommends FIFO if you want to be compliant with the future regulation that might happen, and it's the safest way. It's absolute insanity, guys. Have fun staying poor. Bottom line, by and large. Yeah, highest in, first out. The good advantage of that is, like, if you wanted to go buy a Bored Ape right now for 100 ETH, you could buy 100 ETH, go exchange that right away for your ape, and then that ETH does not really have a taxable gain because you just bought it. So it really just depends on what you're doing, but have fun staying poor. Bottom line. Jack Dorsey says Zuckerberg should have focused on Bitcoin, not DM. Yeah, Jack is kind of like, so DM, you know, just failed, right? They're liquidating their assets to Silvergate Bank. We've talked about that. This was Facebook's attempt at creating a coin. It was Libra, DM. Now it's Novo Wallet using USDP, United States of Double Penetration. And now we've moved on to, oh shit, we're fucked. Right. So they still have the Novo Wallet, which they will continue with, probably using an existing stablecoin, but they've given up on creating their own coin. Probably because they got dunked on by Congress. Everyone went, I don't want a Facebook coin. And now people are piling on. So Jack, taking an advantage to triple reverse over the head dunk on Mark Zuckerberg, was saying, hey, dummy, maybe you should have done it with Bitcoin, right? Is playing the king of hindsight here, dunking on Zuckerberg because that's what billionaires in awesome beards and tie-dyes are going to do. They're going to dunk on billionaires who don't have tie-dye and beards aren't as cool. But basically saying, hey, man, his quote was not as negative as you would sort of assume. Let me find it here. He said, they tried to create a currency that was owned by Facebook, probably for the right reasons, probably for noble reasons. Actually, I'm not sure that that's true. Maybe. But there were also some reasons that would indicate trying to get more and more people into the Facebook ecosystem. There you go. Right? That makes more sense. And I'm not saying it's for a bad reason. Listen, people need access to money. People use Facebook. It's not a bad thing necessarily. This is at the MicroStrategy World Conference, by the way. And he said they did that instead of using an open protocol and standard like Bitcoin. Always comes back to Bitcoin for Jack and a lot of people. But to be quite honest, man, I don't know. I don't think Facebook would have gotten any traction by proposing making Bitcoin Facebook coin either. And I think at the end of the day, stable coins are probably superior for most people in the world who need to transact with minimal volatility and speed. And that's why they're using the Novo wallet and an existing stable coin that they can trust. No, that's what he said. He was like, hey, dummy. He called him a dummy in my mind. I didn't actually watch it, but I know that he probably called him a dummy because whatnot. But yeah, so listen, we love Jack's being such an evangelist for the Bitcoin industry, his belief in it, and the fact that he's probably going to dedicate most of the rest of his life to furthering Bitcoin. But that doesn't mean that everyone else is wrong either. It's unfortunate for Facebook that they failed, probably fortunate for society and human beings and basically everyone in the world in general that happened. But that doesn't mean that it was the wrong path and that everything can be built on Bitcoin. It can't. There are certain things in this world, believe it or not, that Bitcoin doesn't fix. Someone just asked, did Feds change taxes 37%? Nope, that's just where it's been for people who make over a few $100,000 a year. So if you have short-term capital gains, you are paying your maximum rate. This is something I saw that was super interesting now. Deloitte, 82% of Indians surveyed plan to invest in Bitcoin and crypto. 82% of the people in the second largest country on this here dying planet, the dying planet we call Earth. That could represent an extra 15% of the world's population investing in crypto. So this comes after the news yesterday that obviously we're going to get the digital rupee, tempted to touch, because I need you so much, tempted to touch. That's rupee. That's him. He only had one song. Rupee. Yeah, digital rupee, but also that crypto will be taxed at 30%, meaning that India is not going to eliminate and ban crypto, meaning now Indians can have that party they like, Indians party, man. Like they can have like a 17-day wedding for Bitcoin. Get married to your coins and dance, and you come in on the horse, and dude, like Indian weddings are so popping. We should have more of those at my house today. But yeah, imagine if 82% of Indians who were surveyed actually decide to even buy a couple dollars worth of Bitcoin or any crypto. It would be massive for the market cap and would push adoption. India could be the country to watch right now as far as pumping our bags to the moon. Let's take a look at the Bitcoin chart real quick. Weekly chart, we've looked at it over and over again. We need to see follow through after this candle. Every time we get these potentially bullish candles, we're seeing the dumpski come through and just piling on. We don't want to see that. We got to get above 39.6. Everybody's getting bullish at resistance again. It's so hilarious. We have a lot of signs of exhaustion of this mood up. We got to get above 39.6. Bottom line. Here we are looking at the daily. I've showed you these Bollinger Bands over and over again, said center line resistance. See that blue line? See the pain inflicted by it generally when we touch it? Bad. By the way, it's just a line. These are charts. Honestly, whatever, man. But if you're a Bollinger Band trader, it was a clear long here when we were below the bands, and it's a pretty clear short here when you hit the center line because you can place a stop above it, and if you flip it, have fun pushing up to 44,000 at the top of the bands. But those bands are coming down. This could give you a target in the 42s or something if it flips that center line, but not looking great at the moment. And here we are in the daily right now. We still have this ascending, the 4 hour. We still have this ascending triangle vibe right here. Flat top of resistance. Perfect flat top. Now we can do this. Instead of zoning it, here you go. Perfect. 39.3 is the top. But we need to continue making higher lows up towards this, right? You can draw a line. People like to draw a line and they'll be like, oh, no, it's broken. No, it's not. If you're doing an ascending triangle, all you really need is the idea that you have higher lows consolidating against a flat top, which would theoretically, and it only counts if it breaks. This is just an idea. I'm not telling you what happened, which would theoretically flip you. You would trade it like this, right? This would be your confirmation, the break, and you try to test the retest. If this breaks out, it is just an idea. You take the depth here, you extrapolate that shiznit right up in here, and it would give us a target of 46,581 United States dollars. This will be effectively invalidated. Some would say not, because even if you make a higher low than this one, you could draw a wider ascending triangle. But the idea for me, I want to see it hold above 36,640. It's all that's going on in the chart, guys. Not much happening there. But yeah, I mean, Sailor bought, so I guess price had to go down a little bit, right? Yes, bands make her dance. I've actually tweeted Bollinger himself with the reference to bands make her dance, and he actually apparently is a huge Juicy J fan and partied with him at a strip club in Texas one time. I'm just kidding, that's not true, but he did know the reference of bands make her dance. Bands make her dance. Moving on from Bitcoin because it's fucking boring town. Nobody wants to talk about it. Oh, getting a little less boring by the minute. Anywho, Cathie Wood's true believers are sticking with her. Apparently, Cathie Wood's true believers are super lame corporate millennials that wear stupid glasses. What is this picture? How is this the picture you came up with? Cathie Wood. People really love Cathie Wood. Let me show you my laptop with a heart sticker on it. The media, I tell you. I didn't see that picture until just now. But that's Bloomberg. They chose that photo. Sell that shit as an NFT for like $1 million, though. Such a dumb picture. Such a dumb picture. And it could be new laser eyes. That could be new laser eyes. You have laser eyes right now, although your eyes aren't really that lasery. They're more like glowing orbs of pain. I'm sorry. Seek therapy. You got lasers, have to have lasers coming out. You just have glowing eyes. It looks like you're like back from visiting Satan. Yeah. Cool glasses, guys. Cool rose-colored glasses, right? But anyways, Cathie Wood, obviously, she has been the darling of Wall Street for the last few years, making huge bets on tech, huge Tesla bull, huge Coinbase bull, huge a lot of things technology that have dumped to complete shit bull, right? ARK Innovation down over 50%. People feeling the pain, but what's not in this article? First of all, 75% of the people who even bought the top have stuck with it. Smart people. Those are smart people. Yeah. Why, you say? Because as I always say, as Peter Brandt once told me, I tell my kids, buy a company that you like, a really good company for the long term, and hope it goes down 50% in value so that you can buy more. Technology is the future, and you're now getting it 50% off. She actually made a quote. It was in the newsletter. Now I don't. But she says, innovation is on sale, something like that right now, her view. Fire sale on everything innovation in the stock market right now. I believe that technology will probably advance with time, and she obviously does too. She bought a whole buttload of Tesla again, I believe, actually yesterday. But that's the deal. Her people are sticking by her. She has an incredible track record and is just getting hammered at the moment. Probably a good time to start thinking about following Cathie Wood. What would Cathie do? What would Cathie Wood? Yeah. FTX. What chads, man? Stop buying. Buy me. Buy me, Sam. Cheap. FTX buys crypto exchange Liquid Group for expansion in Japan. Deal announcement comes on the back of FTX closing a $400 million round at a $32 billion valuation. Man, they can't stop, won't stop. That was my ditty. Just did ditty. Listen, nobody even knows what the valuation of Liquid is right now or the details of this deal, but Liquid was already a $1 billion valuation in 2019. Imagine where they are now. But Liquid dominates the Japanese market. Sam and FTX want a piece of that, continuing to acquire other companies in their quest for world domination. And I am here for it, but they're not the only ones focusing on the Japanese market. Amber Group, who you have seen, Whalefin, are the sponsors of my Monday afternoon live streams. Amber Group, they have just acquired another Japanese exchange, smaller one called Decurit. The exchange, which has been in operation for 3 years, has yet to turn a profit. That sounds bad. No, it's not really bad, though. Not really bad. What this gives is basically you can go into a market, you can buy their customer base and also their tech. Like FTX coming to the United States and buying an exchange that can already do options and leverage, that's a big deal, right? And so there's usually ulterior motives behind these moves, buying some sort of technology or licensing that these individual exchanges have that you might not have yourself. Yet another huge acquisition in the crypto space. Now, I read this headline when it was sent to me, and I was like, oh, that's dope. Like Trader Joe's, that's like they have cheap white labeled food that generally tastes pretty good and is organic. And now I can eat their coins. It's not what it was. It's not what it was. Apparently, Trader Joe is a DEX. You've heard of the coin Joe probably. But I read this headline. I was like, oh, cool. Like Trader Joe's NFTs. That was my assumption. Right? What would Murder Mace think? He became a preacher and said that Diddy stole all his money. That's what. But Trader Joe's native coin climbs as the deck unveils modular staking. People want their DEX tokens to be modular and function. Have you ever like been walking down the street and been like, hey man, here's my mic. What do you think, man? What would you really like in your DEX tokens? Oh, bro, like if I could have one thing on my wish list, I would really want it to be modular and function. Nobody even knows what that means. Nobody knows what that means. Oh, this is a good take. Chocolate pretzels are healthy as long as they're from Trader Joe's. Any snack you buy from Trader Joe's is healthy. That's science. Science. But yeah, I don't think people are generally out there screaming for modular function in their DEX tokens. But it is pretty cool if you look at it here. Modular staking basically means it's a system that gives token owners 3 independent ways of staking their holdings. Gives you some flexibility in the way that you stake. Broiled, fried, grilled, a lot of options for your stake. But here you go. Masari data shows the Joe token has advanced 58% in the past 7 days. That's good. Outperforming DEX giants like UCK and CRV by a significant margin. But let's take a look at the chart. Getting dumped right now because Bitcoin's dropping, probably. Bitcoin, come on, bounce, bitch. Not much to see here on the Joe chart, but as you can see, yeah, it was down here at 65 cents, reached a high of $1.69. It's a big, big pump in a couple of weeks. So things looking generally good for the Joe token. If I had to draw lines on this 4-hour chart, which you don't really, something like that, right where we are actually, that it holds that 200 MA, which is brand new and fresh. You had to wait 200 candles to get it. And that could be an interesting area. I would imagine that you'll, find some resistance here and certainly some resistance here if it continues to go up. If it continues to drop, you'll be looking at support right through here. And you're going to have fun staying poor if it ends up dropping all the way to here. Okay, cool. That's the Joe chart. Have fun. Thank you. I'll be here all week. Don't forget to tip your waitresses. Oh, boy. Oh, boy. Oh, boy. Oh, boy. Wall Street, guys. Wall Street's biggest bonus season ever. Ever in the history of all time, ever. Making it rain. Literally, Bloomberg used the term making it rain. Well, they said bonuses rain, but I imagine them making it rain on Wall Street. Ooh, guess stocks only go up even if the economy isn't looking great. And I guess that there are benefits to money printing if you're super rich and at the top of the food chain. As I say, the closer you are to the money, the more of it you get to keep. So if you're in the financial business, the higher you get up, the closer you are to that glowing, beautiful orb of cash. Kind of like if you were like in Squid Game, you can almost touch that big plastic ball of sweet cash, right? And someone's saying it set a record every year. It's not a new record every year right now, actually, but now this is it. They went super huge and big this year, right? This is the funny part. Goldman Sachs Group just finished spending an average of 23% more per employee for the past year. It's a lot. The biggest jump in more than a decade. But that's nothing because Morgan Stanley was 30 and JP Morgan Chase was 40. And they were 30, 40, and 50, right? For other banks. Why is this happening? Why is this happening? We're talking about $30 million bonuses, right? Like $30 million bonuses. David Solomon out here on his yacht. I mean, Jamie Dimon, Solomon, Morgan's, James Gorman were each awarded about $35 million for their work last year. $35 million just because stocks went up a bit because of inflation. It's a lot of money. But why is that happening? They actually have some reasoning. Much like sports, it's called demand. If you want to have, it's a race to the top of bonuses. If you want to have the best talent, you got to write the biggest check for the bonuses. And that's what's happening on Wall Street right now, if you ask them. Right? And so they're saying, listen, like I'm at Goldman If I don't pay my top 100 guys $10 million each, they're going to go to Morgan Stanley and get 15. Yeah, right. Not so different than sports. The very top. Apparently, there are people that are in extremely high demand, and those are the ones who are demanding these prices. I think it's kind of disgusting. I think it's probably pretty bad if like you're an average person, and I think that's easy to see, but it is what it is. And these guys now are going to be making it rain. If you own a nice restaurant in New York City, woo, you're about to get a serious infusion of sweet cash. Sweet, sweaty cash. Crazy. Probably time to open a really high-end strip club in New York City, just saying. Significant wash trading Monday. Okay, let's move on to NFTs. Significant wash trading, money laundering in NFT market. Chainalysis. Blockchain analytics firm Chainalysis has detected significant wash trading and money laundering throughout the NFT market. Oh, guys, also the sky is blue and water is wet. Don't tell me how water isn't wet. We do this all the time. Every time I say water is wet, people are like, water's not wet, bro. Water has a property that allows other things to get wet. And therefore, water itself is not wet. What water does is it makes other things wet. Shut up, you're a nerd. Nobody likes you when you respond to things like that. Nobody needs that clarity. Water is wet. I don't care about it. Your science. Don't care about it. Water's wet. Yeah, guys. So what happens here? The argument is that people have made millions and millions of dollars wash trading NFTs. You get 2 wallets, 2 accounts. Oh, look, my beautiful bunny babies. That's my new project I just started. I'm a millionaire. My beautiful bunny babies have a floor of 1 ETH. I'm going to buy one for myself for 1 ETH. Then I'm going to sell it for 1.5 ETH. Then I'm going to buy it for 2 ETH. Then I'm going to do it for 2.5 ETH across all the wallets. And now all of a sudden, there's hype around your NFT project and the floor keeps going up and people start to FOMO in and buy worthless NFTs from you at the higher price, even though you've just been artificially raising the price by selling them to yourself. Right? I'm going to cough right now, so take it. Yeah. Yeah, guys. So that's what's happening here. Major wash trading in the NFT space. Those people aren't in America because you'd have a taxable transaction on any one of those, right? But yeah, a total of 110 of these users have collectively made near 8.9 million in profit from this activity. Just make $9 million just selling yourself NFTs. Pretty good racket, but you got to be careful. Just like anything else, what you invest in. You gotta, in the NFT space, apparently what matters is community. You have to dig into the community, understand how many holders there are, if they're real, why you're buying what you're buying, if you really love it, because generally it's probably going to zero, right? Yeah. So whatever. Yeah, unlike art. Well, it's not art, right? Most of it's not art. Most of these NFT projects are masquerading as art. And what they are is a membership card to a community. So you have to make sure that that's a community that doesn't suck ass. Right? Ooh, I spent $47,000 on an NFT that allows me to be a part of this community that literally has done nothing. I'm in the free Discord just waiting for something to happen. But guys, eventually we're going to have a presence in the metaverse. You'll be able to hang out with other beautiful bad bunnies in the metaverse. So stupid. Unless it's like a Bored Ape or one of the really good ones. There are some good ones, I get. Most of it, though, Dummy Town. So, guys, you know that I like to talk like likes to talk like Gollum sometimes. We needs to. Well, I saw an amazing Gollum meme right here that summarizes the NFT market. So good. Oh my God, it's so good. So good. Here's Gollum sitting at the computer, probably on OpenSea, looking at the Precious. Frodo Baggins right there. So you can't own the Precious physically, but you can pay to have your name listed as its owner in an online distributed database. Probably the funniest, best meme I've seen to describe NFTs, which I do like, by the way, ever. But holy crap. So you can't own the Precious physically, but you can pay to have your name listed as its owner in an online distributed database. Yeah. Right? Yeah. So there's Gollum trying to buy the Precious, but he can't get the actual Precious. But hey, it's scarce. He owns it. Pretty good. Pretty funny. Don't you guys think that's pretty funny? I think that's pretty funny. But speaking of NFT shit, and Coachella partners with FTX US to launch NFTs. No surprises here. Everybody wants in on it. Everybody wants in on that sweet NFT money, guys. And we're just going to keep getting it. But here you go. So the NFT is called Coachella Collectibles. You have to have alliteration or, oh my God, I'm never using the block again. They get show this ad right in the middle. Has to be alliterative, right? You have to have the same letter at the beginning of each word. So Coachella Collectibles will give consumers the opportunity to unlock festival passes, art prints, photo books, digital collectibles, unique real-life experiences at the festival, and physical merchandise, according to the website. Okay, at least they have some utility. That is sweet. Just more evidence that everyone's going in on NFTs. Can't have a music festival without NFTs anymore. FTX Sam Bankman-Fried explains why NFTs outperform the broader crypto markets. If you've seen, NFTs have done actually quite well over the past month, even though the market has dumped to Hades and taken us all to hell with it. This is what hell feels like, in case you guys were wondering. But here's what he had to say, and he's pretty smart. He's a pretty smart guy, that Sam Bankman-Fried. The fact that they're non-fungible makes them less liquid. So a lot harder to sell it off, right? If you're like holding, I don't know, shitcoin X that you can sell immediately on Binance, or an NFT that nobody wants that you're now going to have to sell for half of what you bought it for, you're probably going to go ahead and sell those tokens because your NFT is not that liquid, right? But he said, I've been also a bit surprised about how much they've been outperforming recently. The fact that you're public about owning one makes it harder to sell because it's public giving up on something versus a private rebalancing of your portfolio. People are less inclined to sell their NFTs at a loss. The whole psychology is also very interesting. It's a good point, right? If your Bored Ape or whatever, your Pudgy Penguin is literally like your Twitter avatar and you sell it, you are not just selling, you are apparently a sellout because all the Pudgy Penguins are going to come to your house and they're going to rough you up, dude. Do you want a bunch of Pudgy Penguins at your door just doing Empire Penguin shit with their eggs sitting on their feet, slapping you with their fins, doing happy feet outside? We are a part of a rhythm nation, right? You don't want happy feet outside your door. People are afraid of the Pudgy Penguins. They're afraid of those lazy lions. Yeah, those lazy lions are lazy until you sell. Then they become lunching lions and they come eat you at your door. I mean, God, man. Imagine happy feet just happening like in your driveway all day. Just relentless happy feet. They're dancing and they don't shut up and you hear a little tapping. I mean, most of them are singing, but you got the tap dancing ones. So you can't change your avatar, which means you can't sell your NFT. We are a part of a Pudgy nation. They should definitely make that. Are any of you guys Pudgy Penguins over here? Am I insulting you? Am I insulting you? Did I insult any of your Pudgy Penguins? Probably one of you in the crowd hiding his head in shame or thinking about that smart comment that you're about to put over here about how you are your penguin and your penguin is you, and they're building an ice box that all of you guys can hang out in 2027 in the metaverse. Come on, bro. Anywho, let's keep moving on because it wouldn't be NFTs without Check's article, McDonald's. McDonald's dives in the metaverse to celebrate the Chinese New Year because apparently McDonald's is a huge Chinese company and you just didn't know about it. The American fast food company partnered with Humberto Leon, co-founder of fashion brand Opening Ceremony, to create a Zodiac collection in the metaverse. The initiative will honor the Lunar New Year, China's most significant festival, from February 1st to February 15th. It would not be the metaverse if you could not get extreme heart disease from participating in it. Do people eat at McDonald's? Do you guys eat at McDonald's? I want to know. I want to know. Do you? Nope. Not having Ritalin is a superpower. Yeah. But any of you eat at McDonald's? Like, is fast food a thing? Chick-fil-A is kind of popping, even though, like, I don't know, they're closed on Sundays and have questionable politics. Their sandwiches are so good. I haven't eaten at McDonald's since like the 1990s. Probably. We used to have a rule, my friends and I went to the University of Pennsylvania, and we would drive from Philly when we were probably underage over to Atlantic City to gamble all night at like the $5 tables because we were broke college kids. We went to the Sands Casino. We would have our like fake IDs or no IDs at all, and we would go gamble at the $5 tables, and we had a McDonald's rule. And the rule was the person who won the most or lost the least, this was the pain train, had to buy McDonald's at like 8 a.m. on the way back to Philadelphia. Had to buy McDonald's. And so like inevitably you all lost and we were all broke college kids. So someone who was down like $40 instead of someone who was down like $42 had to buy everybody at McDonald's. And it was the ultimate insult to injury. Or you made $20 and you spent it all at McDonald's. That was our rule. I have another great Atlantic City story. I have to go in a few minutes, but I'm going to tell this because it's fun talking to you guys. One night I got done DJing at 2 o'clock in the morning in New York. And my friend, his name's Jeremy, is actually a pretty big guy on Twitter, venture capital lawyer. Anyways, he calls me out like, I got done at 4. It's 4 o'clock. He calls me at 4:15, not sober, and says, we're going to Atlantic City. I said, what the hell are you talking about? I'm going to sleep. He said, nah, I got the corporate car. We're going to Atlantic City. So we get down to Atlantic City. True story. We get to the Taj Mahal, hit the poker tables. All of a sudden, first of all, we didn't have that much money with us. So I started losing quick and I was like, man, this is going to be a short trip. Then I started having like this weird feeling in my underwear. So I had put on new underwear that had never been washed and apparently started to have an allergic reaction to this underwear at like 6:30 in the morning in Atlantic City. So we proceeded to immediately lose all of our money by like 7:45, as is tradition. And then I was like, okay, dude, like I'm really itchy and kind of burning and we need to get that car home. And he was like, oh, well, yeah, I can't call the car. I actually wasn't supposed to use it to get us here. It's like the law firm's private car. And I was like, we have like no money. Like, what are we going to do? We got on the city bus from Atlantic City back to New York City while I was in like extreme pain and took like a 3.5-hour bus ride at like 8:45 in the morning back to New York City. It was one of the worst nights, but a great story. Terrible night, but a great story. And then I had to go back to work. I was working at Vice magazine at the time, actually. I had to go back to work on Monday and I was in like such excruciating pain that I took a Benadryl to deal with the fact that I was having such an allergic reaction. And then I started to basically trip. And I fell asleep on my desk having mild hallucinations while I was supposed to be at work. Yeah, that's my life. It's a good one. It's a good one. It's been a good one. We do have one more story left. Reddit co-founder raises $500 million fund for crypto startup. Well, why not? Alexis Ohanian here, co-founder of Reddit. What's casual $500 million? We talk about this all the time. There's going to be tens and tens of billions of dollars. Tens and tens of billions of dollars are coming into crypto this year through venture capital. Everybody wants a piece. And you can now just like, if you have any name, you can just casually like raise $500 million. $500 million. Yeah. Yeah, guys. Benadryl is a hell of a drug, man. Yeah. Benadryl lets you watch TV with the TV off. Did I keep? Yeah. I mean, I quit that job after like 4 weeks. So my boss at the time was a guy who's now quite famous. His name was Gavin McInnes. This was in the early days of Vice when they were just expanding in Brooklyn. His name's Gavin McInnes, and he founded the Proud Boys in the United States. But he was a difficult human person to work for. I lasted about a month. He would like, I don't know, like do meth and run around the office butt naked and slap people with his genitals and wild things like that. So I didn't stay working there. Didn't keep many jobs in my life, to be quite honest. I'm not a very desirable work person. But yeah, he was not a great guy. Really a horrid human person, especially to have as your boss. So that's just, guys, we are done for now, but it's Wednesday. It's Wednesday. You know about it's Wednesday, which means Chartapalooza this afternoon at 1:30 p.m. Eastern Standard Time. I'm going to take chart requests from paid subscribers to the Wolf Den newsletter. And I'm going to look at them this afternoon. And hopefully the market will not look like utter butt cubes. And we can take a look at some desirable charts. But I have a feeling we're going to go, oh, this is at resistance. Oh, this is at resistance. Oh, this is at resistance. Right? I don't know. We don't need to look at that. We don't need to look at that chart right now. Anyways, that is the gist. Did I just open that? I don't know. I literally full screen myself. Some things going on here. Anyways, guys, got to run because I'm going to do a little bit of golf. Taking a golf lesson, going to learn. My game was so tight yesterday. My God, my game was so good. Means it'll be complete and utter trash today. I will tell you all about it when I return in about 3 hours. See you guys later. Peace.
That's dope.